Hi there, good afternoon and welcome. You're watching Your Stocks. I'm Mangla Malu. With me is Sumaira Abdi. This is a show where we answer all your stock and investment related queries. But before that, a quick check at the markets. Well, it looks like someone just suddenly woke up the bulls from their slumber this afternoon. A sharp surge that we saw on the Nifty in just the last few minutes as we speak. A vertical rally on both the Nifty Sensex as well as the Nifty Bank. That one should come up for you as well. The Nifty Bank is actually the one which is leading the charge out there. So pull up a couple of these Nifty Bank heavyweights. HDFC Bank, that one's at the high point of the day. Along with that, the sharpest rally has come in on ICICI Bank. That is the one which has moved higher as well. Along with that, what is aiding the cause of the Nifty is something like an ITC which has moved from the lows, and Reliance. That one should come up for you as well. It's the start of earnings season and we have a lot of earnings coming in. Atul Limited, revenue higher by about 15.5%, net profit growing by just about 8.6%. That's telling you perhaps maybe there could be some bit of margin compression. It is a Friday and Sumaira, it's all happening.
Yeah, it's all happening. It looks like that as well. So, we have a long weekend. The market has picked up pace.
Yes.
There's the Avengers that's lined up for most people who have had the foresight to book tickets. And then, of course, we go out to vote on the 29th. That's Monday. All right, so all coming together. But for now, let's take you through our top stories. Market upbeat. They've picked up pace in just the last few minutes. Frontline indices notch up big gains pulled up by IT biggies and private banks like ICICI and Axis. The mid-cap index underperforms.
Tata Steel, that one surges, boosting the entire metals pack after European business for the company shines this quarter. Tata Steel BSL2 gains as the Tata Steel board approves the merger.
The mid-cap index underperforms, but individual result reactions cheer the screen. MCX, GHCL, SBI Life and Cyient react to a good set of numbers.
The Supreme Court pulls up the Reserve Bank for not disclosing the annual inspection reports of banks via the RTI, gives the banking regulator one last chance.
And Chief Economic Advisor Krishnamurthy Subramanian says fiscal deficit is expected between 3.4 to 3.5% for this year, but adds that the yield curve is flattening out. All right, with that, let's invite our two experts on Your Stocks. And remember, it's Friday, so that means it's ladies special today. Mayuresh Joshi and Prakash Kaba join in to answer all the queries that have been coming in from our viewers. So, gentlemen, good afternoon to both of you. Our first question is from Shobha T, who's written to us from Bengaluru. She has 382 shares in Axis Bank, which she has bought at the price of 560. She's been holding on and she's a long-term investor. So what is the outlook now for her? So already making big bucks, but Mayuresh, is there enough reason for her to hope that the stock could perhaps keep moving higher from here? I mean, I've seen some of the target prices this morning are 850 and thereabouts. So a good call therefore to remain invested.
Afternoon, Sumaira. Oh, it does make sense to remain invested. And again, I think in terms of reported numbers, I think the NII growth was very, very stable at this point of time. What they've probably done with their asset quality as well, I think asset quality has definitely improved on a quarter-on-quarter basis. GNP is at 5.26%, net NP is at 2.06%. The provisioning has improved as well. At the same time, I think if you look at the BB rated and below book, that's almost at 7,400 crores. So that's a very encouraging trend. Because the asset quality pressures are ebbing off. You're probably seeing a lot of growth probably still there in the system with capital adequacy remaining strong. I think the advances growth should also catapult the kind of earnings momentum that the bank can report. And ultimately, I think the credit costs should also start inching downwards. So 3.5, 3.6% reported should come down significantly over the next few quarters, giving the I's and ROEs, the exit ROEs that they're looking at 18%, maybe a fair chance of that over the next couple of years. So stay put. I think from a valuation perspective, maybe the stock has moved up very, very sharply along with the other banks over the past few weeks. But I think the growth momentum should continue with the bank. So hold on to your stock.
All right, hold on to your stock. You are likely to make more money, as Mayuresh is saying. This is as far as Axis Bank is concerned. But hold on to your breath right now. The way the markets are moving higher, the Nifty as well as the Sensex at the high point of the day. We have SBI, which has moved higher. And a lot of these banking stocks, which we have been talking about, IndusInd Bank now joins the party. The stock had been under pressure for the last couple of days. So IndusInd Bank also has now moved to the high point of the day. Along with that, we have some Nifty, non-Nifty bank, Nifty heavyweights. HDFC HDFC Limited. That one's at the high point of the day. And we're looking at some recovery from the lows in HUL as well. That one too has moved to the high point of the day. In fact, we have Prakash with us. Prakash, what do you think explains this sort of move that we're seeing on the markets right now? And what levels are we seeking right now?
Well, I would say that market actually traded in a narrow 35-point band. That happens, then it happens either a breakout, not a breakout, up move happens or a down move happens after a narrow consolidation. That's what happened on the long side. Because the market perhaps stayed above a very crucial support of 11,556. So, like I said in the morning, as long as it stays above it, the trend is still intact. But upper regions, there is selling pressure. So, maybe we could see an up move here.
All right. With that, we move on to another query that there is. Ashwini Naik writes to us from Pune, holds about 1,500 shares of HDFC Life at 419 rupees for the last 7 months. She's a long-term investor, wants to know whether to hold or sell. Mayuresh, have you had the chance to look at the HDFC Life numbers? The net profits grew by about 5%. Net premium income came in higher by 15%. And the income from investments, they came in much higher at around 3,755 crores. This versus a loss of around 937 crores.
No, so Mangalam, I didn't see the granular details because I believe the numbers have just come out. But again, I think the large expectations in terms of the new business premium margins actually going and remaining very, very stable for HDFC Life, I think. And that's one of the better margins within the listed space that they probably report at 23-24% odd. That is a sustainable factor because the protection part of their business is definitely in higher as a percentage of the overall product profile. And that is contributing to the margins that we're probably expected to witness. The second element in terms of the gross written premium itself, I think there again, I think sufficient growth parameters are probably in place and they should be firing on all cylinders over the next few quarters. The third element obviously is the commission and the other expenses, which have obviously moved up a tad bit, probably to entail that the distribution of their products happen on a much larger scale and on a volumetric basis as well. But again, I think if you probably look at the overall rise in OPEX and the overall rise in the in the net income that the life company actually generates, I think it's placed very, very comfortably. Now, from an embedded value perspective, I think the embedded value is expected to inch higher as well. Because of the higher margins that it probably enjoys, and the return on embedded value probably remains a little bit on the higher side. But I think the sustainability factor should remain. So I think the EV per embedded value, I think is a tad bit higher compared to the other players. But I think that should probably warrant the kind of product profile and the margins that it reports. So hold on to your stock. I think insurance is an underpenetrated space and this is the space to be in over the next 4 to 5 years.
All right, that's the place to be in for the next few years. So that looks good. Up next, J.K. Dadwal has written to us from Punjab. He has 200 shares in Yes Bank, which he has bought at 199 rupees for the last 3 months. He's a long-term investor and wants to know what to do. Now, Prakash, this is a bit of an unfair question to you because the results are expected this evening from Yes Bank. But in the show prior at 1:30, you had put out a call, I think, on Yes Bank as well. Therefore, what is your advice for this viewer?
Is it a make or break levels? Basically, when I look at the highs around 282, and we just had a target of 290, which got achieved like a dot. Thereafter, we're seeing some kind of selling pressure. If it comes down slower to maybe around 220, I wouldn't be surprised. So if you get a buying opportunity closer to 20, I think it's a good place. But Yes Bank, from a larger term perspective, I think it's good. It's a buy on tips. So far, there's a weakness short term, but I won't worry about it.
All right, you wouldn't worry. There is definitely no worries if you're looking at a couple of these mid caps. Yes, the mid cap index definitely is underperforming right now, lower by about 0.4%, but a few of them are doing well. We have Bharat Financial Inclusion, that one's doing well, perhaps following IndusInd Bank. Along with that, we have DCB Bank too, moving higher, and MCX, that stock should come up for you, up around 6% as we speak. MCX came out with its results yesterday. It's a high operating leverage business, so average daily trading volumes were higher by about 13% in the fourth quarter, which resulted in the margin expansion as well as a net profit growth of nearly 78.5%.
And earlier this morning, actually, we got a report from Fitch which says that the financial profiles of oil marketing companies may be at risk because of the pressure from the government to increase shareholder returns. Muralidharan R, the Senior Director of Corporate Ratings at Fitch Ratings, now joins us on the telephone line. Hi, Muralidharan. Good afternoon. Thanks very much for speaking with us. What is the entire rationale that, you have gone through which suggests that, you're finding that the financial profiles are at risk now? Can you take us through all of it?
Sure. Thank you. Essentially, what's happening is if you look at most of the oil companies in India, they are undergoing a high capex phase. So they're making large investments to upgrade their refineries and also for meeting the new emission norms by 2020. And they're also expanding their refineries. So given this, the high capex levels and the fact that the GRMs have kind of moderated in the last few quarters, and we expect that to be the scenario for the next couple of years as well. That's likely to kind of put a pressure on the cash flows for the oil marketing companies. We've seen the government pushing state-owned companies for higher dividends and also share buybacks. So in this scenario where they're already spending a lot of cash on the capex, this will increase their negative free cash flows and to that extent affect their credit metrics. So we believe the credit metrics could weaken if this pressure is sustained for the next couple of years.
All right, fair point. We're getting some numbers coming in from Piramal Enterprises. We have consolidated net profit at close to around 457 crores. This compares with 374 crores year on year. So we'll keep an eye out on some other details coming in as far as the top line is concerned and also the asset quality. That'll be most important for Piramal Enterprises. We'll definitely watch out for how it goes. Okay, revenue has grown by 23%. We'll await the presentation for more granular details on asset quality and sector exposure as well as liquidity issues that we have as far as this business is concerned. Definitely watch out for more details. Maybe.
But you know what's on everyone's mind, right? More than the numbers, they're keen to know whether anything will be revealed about whether the company is in the race for DHFL and whether or not they let anything out of the bag today.
Absolutely. So definitely we'll keep an eye out on that. A fair amount of suspense there. But let's go back to our conversation that we were having with Fitch. If you could tell us, Muralidharan, what exactly is the role of crude oil out here? Your rationale is that, okay, because they're owned by the government, they may be, at risk for certain other reasons. However, the crude oil prices, they're moving higher. How does that factor into your thesis?
Sure. I mean, I'll probably answer that for the oil marketing companies. You're right that the crude oil prices are increasing, and given that this is an election year with the ongoing elections, there can be intervention in the fuel prices. But what we've seen in the past 18 months or so is whenever we've seen some intervention in the product prices, the oil marketing companies were allowed to kind of make up those losses in the subsequent quarters. So to that extent, we believe, since the way credit rating agencies look at it, we generally take a medium to long-term view. And in that context, we don't see that as being a significant risk. And that's primarily driven by our belief that the daily revision in prices to reflect the market price will continue over the medium term. So you may have some short-term distortions in terms of the prices, and they may affect the profitability over a quarter or so. But if you generally look at it from a longer period of time, we believe the oil marketing companies will be allowed to recoup any losses in such an instance.
All right. Thanks a lot for joining in and stopping by and giving us your quick analysis or quick thesis that you have with regards to the oil marketing companies. Keep an eye out on the markets. Now, the Nifty has notched a century, a 100-point gain out there. The Nifty Bank, a quadruple century if you must, 415 points out there, with Sensex having a triple century as well. We're surging. We take a short break and come back. But as Mumbai gears up to vote on Monday, we will bring you our election special segment very soon.